Good morning everyone. PDIC, Philippine Deposit Insurance Corporation. What is PDIC? PDIC is a government instrumentality created in 1963 by virtue of Republic Act 3591 to ensure the deposit of all banks which are entitled to the benefits of insurance. The latest amendments to RA 3591 are contained in RA 10846 signed into law on May 23, 2016. RA 10846 empowered PDIC with stronger authorities to protect depositing public and promote financial stability. The new law also includes important provision to ensure that the PDIC remains financially and institutionally strong to fulfill its mandate under its charter. Role of PDIC. The role of PDIC is to assure that the deposit that the role of PDIC is to assure that the deposit insurance of the depositor will be granted to the depositor. Also, PDIC is protecting the small investor or depositors, building a strong banking confidence and encourage us to deposit to the banks. Membership of bank with PDIC is mandatory. The bank license by the BSP to operate in the Philippines, which include banks incorporated under the Philippine law such as commercial banks, savings banks, mortgage banks, stock savings, loan association, development banks, cooperative banks, rural banks, and domestic branch of foreign banks. Mandates and function. 1. Deposit insurance. The PDIC provides a maximum deposit insurance coverage of the 500,000 pesos per depositor per bank. To pay insured deposits, the PDIC builds up the DIF or Deposit Insurance Fund primarily through assessments of member banks at annual flat rate 1/5 of 1% of their total deposit liabilities. So kung may 500,000 na insurance na maximum deposit insurance ka, and then times 0.1 equals to 5,000 times 1/5 equals to 1,000. So yung 1,000 na yun mapupunta sa DIF or Deposit Insurance Fund. For purpose of computing the insured deposits, all obligation or loans of the depositor with the closed bank as of bank closure shall be deducted from the depositor's total deposits with the said. If you have an obligation to pay in the bank, it will be deducted in our total deposit, and whatever the remaining maybe will insured its maximum 500,000 pesos. A joint account shall be insured separately from any individual owned deposit account. If we have a combination of single account and joint account, we can have a maximum deposit insurance of 1 million pesos because the joint account is insured separately from individual owned deposit account. 2. Examination and resolution. The PDIC works closely with the Bangko Sentral ng Pilipinas to help maintain stability in banking system. PDIC is authorized to ensure regulations to implement its charter, conduct bank examinations and investigation to assess financial stability and soundness of bank and their adherence to banking and deposit insurance rules and regulation, and extend financial assistance to eligible distressed banks. Because PDIC has the authority to help depositor have a quicker access to their insured deposits should their bank close. Number 3, receivership and liquidation. The PDIC is statutory receiver and liquidator of closed bank. Upon order of Monetary Board of BSP, PDIC takes over closed banks, administer their assets, records, and affairs, and manage and preserve these assets for the benefit of the closed bank's creditors. Under RA 10846 or the amended PDIC charter, a closed banks transition seamlessly from closure to liquidation. Enabling PDICs to dispose and distribute assets and settle claims of creditors in accordance with the preference and congruence of credits as provided by the Civil Code of the Philippines. PDIC covers only risk of book closure order. PDIC covers only risk of a book closure ordered by the Monetary Board. Thus, bank losses due to theft, fire, closure by reason of strike existence of public disorder, revolution, or civil war are not covered by PDIC. Board of Directors. The Board of Directors is primarily responsible for the governance of the corporation. The board is the government's agent in pursuing economic growth and development within the ambit of corporation jurisdiction. To this end, it will be necessary to ensure that the only individuals who are fit and proper by reason of the experience, education, training, and competence can be appointed as members of board of PDIC. PDIC, being created by special law, shall have a board of directors composed of the following as prescribed in each charter. And the Secretary of Finance, who shall be ex officio chairperson of the board without compensation. The governor of the Bangko Sentral ng Pilipinas, who shall be the ex officio member of the board without compensation. The President of the Corporation, who shall be appointed by the President of the Philippines from the shortlist prepared by the Government Commission for Government-Owned or Controlled Corporation pursuant to Republic Act 10149 to serve on a full-time basis for a term of 6 years. The President of the Corporation, who shall also serve as Vice Chairman of the Board. Four members from private sector to be appointed for a term of 6 years by the President of the Philippines from shortlist prepared by the Governance Commission for Government-Owned or Controlled Corporation pursuant to Republic Act 10149. The member of the Board Directors. Carlos G. Dominguez is the chairman. Siya ay secretary ng Department of Finance. Roberto B. Tan, Vice Chairman. Siya naman ay President ng PDIC. Benjamin E. Jokno, Member. Siya naman ay Governor ng Bangko Sentral ng Pilipinas. And Rogelio M. Guadalquiver, Vice Chairman. Siya naman ay Private Sector Representative. Eduardo M. Pangan, also member, Private Sector Representative. Reynaldo F. Tansyoco, member, Private Sector Representative.
Hi, good morning everyone. The topic that we got is Philippines Deposit Insurance Corporation. So before I start, I would like to share a brief history about PDIC. You know, when the banking crisis in the US worsened in 1930s, the US Congress passed the Banking Act of 1933, which created the Federal Deposit Insurance Corporation. The FDIC provided deposit insurance on a national level. So, 30 years later, the Philippines went through a similar banking crisis. In order to stabilize the situation and restore confidence in banks, the Philippine government created its own version of deposit insurance system through Republic Act 3591, which created the PDIC on June 22, 1963, to protect depositors and help maintain financial stability. So, what is the source of funds of PDIC? The Deposit Insurance Fund is the source of funds to pay out deposit insurance claims. The fund source for deposit insurance payouts and financial assistance to banks. The bank monitoring and extension of financial assistance is that the Philippine Deposit Insurance Corporation is tightening its bank evaluation and assessment processes in an effort to improve its ability to anticipate potential problems in the banking sector. And also, the financial assistance to be granted by PDIC under the incentive program is a combination of preferred shares and direct loan to boost the capital of the bank. So, bank monitoring and extension of financial assistance is that the PDIC is reviewing its bank examination and oversight functions in preparation for new regulatory that will tighten its monitoring of financial institutions. Payment of insured deposit claims. The term insured deposit means the amount due to any bona fide depositor for legitimate deposits and an insured banknote of any obligation of the depositor to the insured bank as of date of closure, but not to exceed 500,000 pesos. A joint account shall be insured separately from any individually owned deposit account. If the account is held jointly by two or more natural persons, the maximum insured deposit shall be divided into as many equal shares as there are individuals. According to Republic Act No. 9576, insured deposit stipulates that PDIC will not pay deposit insurance for the following accounts or transactions, like investment products such as bonds, securities, and trust accounts, and deposit accounts which are unfunded, fictitious, or fraudulent, and deposit products constituting or emanating from unsafe and unsound banking practices, and also deposits that are determined to be proceeds of an unlawful activity as defined under the anti-money laundering law. The maximum deposit insurance coverage is 500,000 per depositor. All deposit accounts by a depositor in a closed bank maintained in the same right and capacity shall be added together. So, how long does it take PDIC to settle a claim for insured deposit? PDIC aims to pay a valid claim as soon as possible. Prior to payout, claims are examined thoroughly. This is to protect the deposit insurance fund, which is the source of insurance payments. But sometimes depositors mistakenly assume that the payouts are sourced from their deposits. This is not the case. The case is the payouts are from PDIC's fund. The claim for insured deposit shall be settled within 6 months from the date of filing provided all requirements are met, but the claim must be filed within 24 months after bank takeover. The 6-month period shall not apply if the documents of the claimant are incomplete or if the validity of the claim requires the resolution of issues of facts and law by another office, body, or agency independently or in a good coordination with PDIC. So, don't forget that PDIC covers only the risk of a bank closure ordered by the Monetary Board. Thus, bank closes due to the theft, fire, disorder, revolution, or civil war are not covered by PDIC. Thank you.